During a high school class project, my teacher told me it's unrealistic being a CEO. It's been my dream to be a CEO since I was 10. So I told her, it is realistic. Follow me on my journey to learn what it takes to become a CEO. Hey guys, welcome to another episode of the Realistic CEO podcast. Today we're here, Raymond. How you doing today, Raymond?
I'm very well. Thanks for being here, Mike.
Thank you for taking the time out of your day to come on to the podcast. I appreciate that.
Absolutely.
So for the first question that I do want to ask you is, can you tell us a little about what you do here?
Absolutely. So I lead Common Capital, which is a community development financial institution, a CDFI, certified by the U.S. Treasury to provide financial products and services to people primarily with low to moderate income or people who have businesses in low to moderate income census tracts. All of that's a really fancy way of saying we're a community loan fund. We're in the business of making loans to certain small businesses exclusively in Western Massachusetts, businesses that can't get the financing they need, whether it's all of it or part of it, from a conventional source like a bank or a credit union. We know that small businesses, especially early stage businesses and businesses owned by people that may not have had previous business experience, need more than just capital to grow and sustain their businesses. So we also provide free business technical assistance to our borrowers, education and training and things to help them become better at running a business and not just doing the thing they already know how to do.
Can you tell us a little bit about your background to how did you get to where you are today?
Absolutely. It's a long and winding road. I started out in banking. I had actually dropped out of college and had an opportunity to get into a management training program in a small bank in San Diego, California. And so I learned the ropes of banking there. I started as a teller and I worked in a variety of departments and then learned consumer lending in that bank. And I really enjoyed lending. It really appealed to me. And from there, my family and I moved to Portland, Oregon, where I worked for a much larger bank. And I got into commercial lending, business lending, middle market lending. Really enjoyed that a great deal, with one exception. When you work for a big bank, you're just a soldier in a vast army. And even though we were very focused in that bank in developing relationships with our borrowers, that relationship was really about getting more revenue for the bank and less about the person-to-person relationship. I enjoyed the relationship part of it. I didn't enjoy the part of it that was focused on just making money for the bank. I wanted to truly help people. So I decided to change careers. And importantly, I didn't know what I wanted to do, Mike. So I scheduled some informational interviews with a variety of charitable foundations. My theory was I'd spent all these years lending money to businesses. I could probably be really good at giving money away, other people's money away. So I interviewed with some program officers at some foundations in Portland where we were living at the time. And each one of them said I didn't have what they were looking for. What they were looking for wasn't a finance person. They were looking for people with experience in the nonprofit sector, because that's who foundations support. But one of them told me about this nonprofit organization that they'd learned about that was called Cascadia Revolving Fund. It was a CDFI, much like Common Capital is today, that was based in Seattle and that was planning to open a new office in Portland. And I heard that and I was like, okay, that's interesting. I don't know what a CDFI is, but I really want to work for a foundation. So I heard it, but I ignored it. A few days later, there was a newspaper article in the local newspaper about Cascadia Revolving Fund planning to open their new branch, if you will, in Portland, Oregon. And I thought, now I better listen to this. This is two messages coming at me. I better see what this is all about. So I called up the CEO of Cascadia Revolving Fund and said, first I did some research and I realized that this was an organization I wanted to work for. They were making loans to small businesses, much like Common Capital, that couldn't get bank financing. So doing the part of the job I liked, but doing it with a lot more empathy and focus on the business and not on making money, because Cascadia, like Common Capital, was a nonprofit organization. So I called up the CEO and said, I'd love to come work for you. And I live in Portland and I think I should open your new branch here. And she said, that sounds great. See you in 6 weeks. It took about 3 or 4 months before she hired me to run that office. That was in 1999. I'd been a banker for 13 years. In 1999, that job changed my life for the better. I learned that CDFIs like Cascadia and Common Capital, while most people haven't heard about them, there are many of them. There's now 1,400 organizations like ours around the country. And the first conference I went to in our industry, I learned about many of these other organizations, and I was completely inspired, Mike. I knew I was in the right place, and 26 years later, here I am. In between, I've led the business lending team for a couple of other loan funds. I led a business finance program for the state of Maryland. I led a business finance program for Goodwill Industries International, always focused on providing finance to small businesses, in the case of Goodwill, to their member nonprofit organizations. My last job before coming here was at the Vermont Community Loan Fund based in Montpelier, Vermont, where I led their business and childcare lending program. And then I saw this job advertised here, and I live in Western Mass. I was commuting to Vermont, which was hard, and I knew this was exactly the job I'd been training for all those years. And that's how I wound up here.
What is a CDFI? Is it like meant to help smaller businesses? Is like that the goal of a CDFI?
All community development financial institutions have in common that they're primarily serving low to moderate income people and communities, and they're doing that through financial services or financial products. There are some banks that are CDFIs. There are credit unions that are CDFIs. Greylock Federal Credit Union out in Pittsfield is a CDFI. There's a few venture capital funds that are certified as CDFIs, but the vast majority of the 1,400 CDFIs in the country are nonprofit organizations operating loan funds like ours. About probably 40% of them are focused primarily on financing affordable housing. Probably about 30 to 40% of them are focused on financing small businesses like ours. And then the other 30% or so do both of those things and more. There is a CDFI based in Providence, Rhode Island, that only does consumer lending, a very small dollar lending for consumers. There's a CDFI in Boston called Blue Hub Capital that does small business lending, big business lending, affordable housing lending, and mortgage lending. But the common thread is helping folks that, largely because of their lack of wealth and lack of generational assets and wealth, don't have the same opportunities to get a loan from a bank that other folks do.
So what would be the difference between a company that is like a CDFI versus a company that's not? What would be like the big main differences, and like how do you become it? How do you get involved in that as well?
As a CDFI, how does an organization like a CDFI get created?
Yeah.
Let me tell you the origin story of Common Capital. It was founded in 1990 by a gentleman named Chris Sykes up in Greenfield. And Chris was an entrepreneur. He had a piano tuning business, and he needed a loan to buy some tools and equipment to expand his business. And he couldn't get a loan from a bank. So he had this idea that he would start a loan fund that would serve entrepreneurs like him who couldn't get a loan from a bank. At that time, this was a growing industry. In 1990, the industry had been in existence for about 5 or 10 years. I say industry, there were very few organizations like Common Capital at that time. But Chris met with people that were doing this kind of work in other parts of the country and other parts of New England, and raised money from some foundations and from some churches. They invested in it to create a pool of funds that Chris and his team could lend out to small businesses, and as they got repaid, re-lend it out to other businesses. It's a microcosm of what banks do, but without having depositors. When we deposit our paycheck in a bank, they aggregate all those deposits from all the thousands of people that deposit in their bank and use that to make loans. At a loan fund like Common Capital, we don't have depositors, we have investors who lend us or grant us their money to make loans to small businesses, perhaps like yours.
So how did you get into this industry? You talked about how you worked at a bank, but what truly made you want to switch to what you're doing now?
The big thing in a bank was, as I said, I felt like I was a soldier in a vast army. I was working in a middle market commercial banking center that had a line of 30 desks in 3 rows in an office building with a nice view. And we were all doing similar work. This was in Portland, Oregon, and we were really serving the entire state of Oregon. And while the work was interesting, I felt as if anybody could have been doing what I was doing because it was mechanical. I honestly felt like if I fell over dead at my desk, they'd cry for a moment, then they'd push me aside like a Civil War soldier or a Revolutionary War soldier and prop another one up in my place. And there was just really nothing unique or about it, or nothing that was feeding my heart. I had a few borrowers that I'd become close to, that I saw outside of the work and really felt as if I was making a difference in their businesses, but that was the exception, not the rule. Because in a bank, you're there to make money for the bank. So when I heard about community development finance, first from the foundation person I spoke with, and then through the newspaper article, and then started researching it, I realized that this was the same kind of work, providing capital to folks, but pairing it up with education and really with a focus on helping those businesses grow and become sustainable and eventually become bank borrowers. But that spoke to my heart. And that's what's kept me excited about doing this work for 26 years, is that we work side by side with entrepreneurs like you, and we help them achieve their goals. And we do that without any shareholders. As a nonprofit organization, our stakeholders are the members of the community. All of us are stakeholders in any nonprofit organization in our community. So the goal is to help the small business thrive so that the community thrives. And that really speaks to me.
So I want to go back to when you said you were in college, but you ended up dropping out and going to banking. So like when you were in college, like, what were you pursuing?
I was pursuing a degree in political science, which I eventually got. I think at the time my father was a lawyer, and there was some thought that I might become a lawyer, and I loved politics at the time. I loved political science. I loved learning about how legislatures worked. That really appealed to me. But I left college for personal reasons and just got on a different path. I was pretty unfocused. After college, I sold cars at a Ford dealership, and then I worked in a mailroom in a law firm, and I was unskilled. I didn't have the skills to go out and get a job that was more than just a minimum wage job until somebody opened a door for me into this bank training program. It meant relocating my family. It didn't pay very well, but it had a lot of potential opportunity, and it was great. I didn't go to business school. I learned what I know about business and about lending by doing the work, first in a community bank and then in a super regional bank.
So how were you able to take like the skills that you obviously learned in banking to what you do today?
It's very similar in terms of we are, as I said, a microcosm of a bank, and what we do is the bank-like thing that we do is lending. We lend money to small businesses, and banks, any lending decision is really predicated on three simple ideas. We have to ask ourselves whether somebody's making a student loan or a car loan or a home loan or a business loan. The first question you have to ask is, can the borrower repay the loan? Hopefully the borrower gets the money from you and wants to repay the loan. Well, the first question is, do we think they can? And the second question is, do we think they will? And the third question is there a plan B if things don't work out? And that plan B is typically collateral. Make a loan on a car, you take the car as collateral. If things don't work out, hopefully that person sells the car, repays the loan, and everybody goes away happy. It doesn't usually work that way at a bank. Most loans get repaid, and if they don't get repaid, it usually gets a little ugly. So this idea of learning how to lend money at a bank is directly translatable to learning how to lend money in a community development loan fund. The big difference, though, is that banks lend inside of a box that's prescribed in part by their regulators. It's a box with bold lines, and they don't color outside the line. In community development finance, because we're helping folks, businesses, individuals, affordable housing projects that can't get all the financing they need from a bank, we need to think literally outside that box. Our box, it's the same questions about can the borrower repay, will they repay, do we have collateral if things don't go well. It's the same box, but our box has fuzzy lines and we like to color outside them. We try to be more creative. We are absolutely much less invested in whether or not a borrower has collateral than a bank is. We're much more focused on people. And do the people have a good plan? Do they have experience? Do they have commitment? Are they coachable? And those are the things we look at a little bit differently than the way a bank does. But fundamentally, the mechanics of making a loan are the same.
So earlier you said like common capital, you're not only like lending, but you're also there to help the businesses as well. And like, why here are you take that approach?
Small business people that have an idea. I think about you and your idea with this, and I think about your dad with Standout Truck and his earlier business, Stinky Cakes. You might have an idea and know exactly how to execute on that idea, but you might not know about what I think of as capital B part of business. And that's the stuff like the bookkeeping and the accounting and the financial statements that help you manage your business. The marketing. Of course, your dad's a bad example in that case because he had a marketing business. But a lot of small business owners don't know how to keep their books, don't know how to market themselves, don't know how to hire and fire, don't understand the regulatory and legal aspects of their business. You might be really good at baking cupcakes, but that doesn't turn you into a business person. So we try to wrap around all those capital B business concepts to the cupcake maker and help them succeed in all aspects. I can't teach you how to bake cupcakes, but if you know how to make really good cupcakes, I can help you turn that into a business.
So, like you talked about, you had a lot of multiple careers where you moved different states, but what made you want to take this job here at Common Capital?
I'd spent at that point nearly about 20 years doing this work in a variety of settings, mostly in loan funds. And I'd been working toward leading my own organization. And I have to say, I miss being the person that does the lending. It's hard for me to step back from that. We have a team of 8 other people here at Common Capital. Our director of lending has 3 loan officers working with her, and they do the nuts and bolts lending every day. And I miss doing that, frankly. Now my job is very much focused on building relationships, raising money, and promoting the work that we do to bring more borrowers in and more resources in. And that's enjoyable too, because it's serving ultimately the borrowers that we're trying to serve. So my journey was, I'd done a lot of lending, I'd led lending teams, and it was time to take the next step up to lead the entire organization, including the lenders.
So how do you know the right people to give the loans to? Yeah, I know this is the person I do want to work with.
Aside from these 3 questions of, do we think they can repay the loan? Do we think they will repay the loan? Do we think there's a plan to repay the loan if plan A doesn't work out? Aside from that, in community development lending, we're very focused on 2 things I mentioned already: commitment, stick-to-itness, and coachability. We have found in our field, people that aren't yet qualified for a bank loan, they need more help than just capital. And we found that people that come to us and say, I know everything I need to know, just give me the money, tend not to be the best risks. Sometimes those are the folks that fail because they aren't willing or able to ask for help. The flip side of that are the people that understand that they don't know everything. I don't know everything. Those people tend to be better credit risks because they are coachable. If they want to soak up more knowledge to help their business become more successful, then we find that they are better risks. We don't always know. Every time you make a loan, it's a good loan on the day you make it. We hope it's a good loan on day 2 as well, and we hope it's a good loan 60 months later when it pays off. But in between, as entrepreneurship is a winding path, every single one of our borrowers is facing challenges that keeps them from getting a bank loan in the first place. So there's never a sure thing. But if they are coachable and they have commitment and they have appropriate experience for what it is they're trying to do, hopefully with the capital and the additional support we provide, the coaching, the training, and the education, they can grow their business and succeed. But we don't ever know for sure. We're really looking, Mike, at people's character. There's this other concept in lending called the 5 C's of credit that banks use as sort of an outline for how they lend money. And it includes capital and character and conditions and collateral and cash flow, and it's very technical. Character is the thing we really focus on. We are making loans here to people, not paper. When you get a loan from a bank, when you get a student loan or a car loan or a credit card, those lending organizations are using your credit score to make a decision. And that credit score is based on an algorithm. I am a believer that those algorithms are racist, sexist, and classist, that they were designed by and designed for white middle-class men like me. In the 1980s, when I started as a lender, women were just able for the first time to get loans on their own without their husband on the loan. Wow. That was based on a new law that was passed in the 1970s. And even then, a woman business owner walking into the bank in 1986 for a loan for her business, many bankers would say to her, "Where's your husband?" Which I find offensive. I think credit scores are offensive in the same way. They're an important tool to these big lenders that are doing the credit card lending and the car lending that is really important to us in our economy. But at a loan fund like Common Capital, we don't give a damn about the credit score. We care about credit history. We care about the performance somebody has on their prior loans. And we look at that loan behavior and that repayment behavior individually. We look at the person, not just the paper on which that history is written. And we try to understand what's going on in a person's life. We had an applicant a few years ago. It was a partnership between two men who had a business and they wanted to grow the business. And one of the partners had a great credit history, and the other partner had a terrible credit history. His house had been foreclosed on about a year early. And the loan officer said to me, "We can't help this person." I said, "I don't know. Why was their house foreclosed upon? Let's not just look at the fact that there was a foreclosure. Let's ask the question, why? Maybe that person was married and his spouse had cancer and they spent 3 years battling cancer and spent all their money on medical treatments and then lost their house as a result. That happens. Are we going to ding them for that? We are not. Maybe they lost their job. Maybe there was a recession. Maybe there was a pandemic. So we ask people questions about this, and that really gets to their character. If I ask somebody, "Why were you late on your car loan, 5 loans in 2020? And they say, "Oh, that was my partner's fault," that's a sign of bad character to me. But the person that says, "In the pandemic, I lost my job and I had to make some choices about whether I could pay my rent or pay my car loan. And I know I messed up by not paying my car loan, but I didn't have a lot of choice. And since then, I've worked hard to reestablish credit." That's somebody demonstrating good character. So we really focus on character and on people as people and try to understand that people have stuff going on in their lives that we don't know about, and we're nosy. We ask about it because we want to know how that informs their entrepreneurial journey.
That's awesome. So before I continue asking questions, I want to read my book I co-wrote with my dad called I Am a CEO, Realistic CEO. So it's starts by saying, in the sunny town of Dreamville, there lived a boy named Tony with a big, bright dream. One day, in Mrs. Parker's class, Tony announced, "When I grow up, I'm going to be a CEO, Chief Executive Officer." Mrs. Parker smiled and said, "That's a big dream, Tony. Maybe think of something a bit more realistic." Tony's eyes sparkled. "But it is realistic. I have a plan," he said with confidence. "I will read lots of books and learn about business," Tony explained, holding up a book titled Lemonade Book. "And I will practice by starting a lemonade stand. It will be the best in town," said Tony, while sharing a drawing of his stand. Mrs. Parker was surprised. "That's quite a start, Tony. But being a CEO is more than lemonade."
Is it?
"I know," Tony nodded. "I will meet and interview successful CEOs, business owners, founders, presidents, executives, and community leaders. I will learn from them. I'll learn to make good decisions and solve problems." Tony continued, "I also learned to be kind and help others, just like a good leader." Mrs. Parker smiled. "Tony, I think you just might be a CEO one day." With a beaming smile, Tony said, "I'll do the LBW and I'll practice the 5 types of work. They are work hard, work smart, work right, network, teamwork. You'll see, Mrs. Parker." Years later, Mrs. Parker read a newspaper with a familiar face on the cover. Tony, CEO of More Than Lemonade Inc. She remembered the little boy with the big dream. "He did it," she whispered with pride. Back in Dreamville, Tony, now a CEO, smiled. Dreams do come true with the 5 types of work, along with self belief in action, the LBW, the long, lonely, boring work. And in his office, the drawing of his lemonade stand hung on the wall. Remember, no dream is too big if you believe in yourself, are willing to work for it. Create a simple, realistic plan and follow it through to execution.
It's a great book,
Thank
and it's a
you.
great story.
Thank
So I'm still mad at Mrs. Parker.
you.
It reminds me of my very first lesson in business,
Mhm.
which I frankly forgotten about. And it was a lemonade stand.
Mhm.
I grew up in the suburbs of Los Angeles, and I wanted to do a lemonade stand one day, and my mom helped me out with it. And she took the lemonade, the frozen lemonade, out of the freezer, and she helped me mix it up in a couple of pitchers. And I went out and set up a table, and I sold lemonade all day long, and I made money. I think I made $12. And I went home and I said, Mom, this is so great. I made $12. And she said, No, you didn't. You didn't have to pay for the lemonade. You didn't have to buy the pitchers. You used my table. And I thought, wow, it's really depressing. I was so disappointed. And at that point, I didn't have any interest in going into business because it seemed really hard. But years later, I've owned a business before. And I think the lesson there is that it's more than just selling. You have to understand all these other things that go on behind the scenes. And I think that's what we're all about here at Common Capital, is helping people open their eyes to the things beyond just mixing up the lemonade and making people happy when you sell it to them, but all the things that have to happen in the background to make that successful.
That's awesome. So I wanted to ask you some questions from Tony based on what Tony said inside of the book.
Absolutely.
So Tony he talked the 5 types of work. So we're just gonna get a run through of that real quick. So the first type of work is working hard. So can you tell us what working hard means to you?
Wow, I think working hard is hard to do. There's so many distractions in our world these days, especially when we have a computer in front of us, and a lot of my work is on the computer. It can be hard to focus. I think working hard is about focus. I think it's about accountability. I think it's about making plans and executing those plans and then being accountable for the completion of those plans. I also think that on the one hand, in my job and for my team, you should be present when you're at work, and you should work the full day, and you shouldn't take your work home with you. But out of the other side of my mouth, I'll say, I hope our brains never stop thinking about work completely, because it's the experience we have in the world that helps us understand how to do better work with the people we're trying to serve between 9 and 5. So yeah, I think you have to commit to being focused during the time you're doing your work from 9 to 5 or whatever it is, but also be open to the lessons you learn in the world when you're not at your desk from 9 to 5, and bring that to work with you.
The next type of work is working right. So can you tell us what working right means to you?
I think working right means treating people well and treating yourself well. So in terms of treating yourself, I think workaholics are a bad example for the world. That's not to say that we shouldn't all work hard and we shouldn't be focused, as I just said, but I think you have to have a healthy balance in your life. And we don't work just to work. We work to generate resources for ourselves and our families, for our employees and our employees' families, and to do other things in the world. And I think part of that is finding that work-life balance so that your work can be better and your life can be better. Working right, I think, also means treating people well. We don't do any of this work in a vacuum. You might be a sole proprietor retailer, you might be the only person working in your business, but you're interacting with other people all day long. You might have a job like mine where I'm largely in my own office all day long, but I'm on the phone and I'm on Zoom with lots of other people, and I'm leading a team. And I think we have to remember the golden rule. We have to treat other people the way we want to be treated. We have to recognize that we're all people on this earth trying to move forward to take care of ourselves and our families, and treat people well and with kindness. I was asked during my interview for this job, what do I see as the essential qualities of leadership? And it was a question I had never really given any thought to before, Mike, but the answer was very clear to me right away. Transparency, accountability, and kindness. And I think that working right means working with kindness and empathy.
The next kind of work is working smart. What does working smart mean to you?
Wow, working smart. I don't know. I don't know that I always work smart. I think it probably For me, means recognizing your strengths and weaknesses, using your strengths to do work well, and acknowledging that if there's something you need to do and you don't have what you need to do it, to go find the resources, the assets, and the support to do that work well. I'm really good at lending. I'm really good at leading a lending team. I have a huge responsibility for fundraising, and that is not my best work. I know how to do it, but I really need support to do it smart. And so I talk to people who know how to do it well and get their advice, and more than just their advice, their moral support to help me work smarter.
The next type of work is network. So what does network mean to you?
Network, I think, is inherent in everything we do in life, and it's about people. We're on this earth with lots of other people, and unless you're on a desert island somewhere, you're going to interact with others at all times. And certainly in a business sense, networking means building relationships. And I think relationships drive the world. Relationships drive business. Relationships drive our work here at Common Capital. So networking is about meeting people that you don't know, especially meeting people that aren't like you. I think inherent in the work we do is we're not making loans to middle-class white guys like me. We're making loans to people that have had a different journey than I have. And so for me, networking means meeting lots of people that haven't had my journey and learning about those journeys and learning how to be supportive of those journeys.
And then the last type of work is teamwork. So what does teamwork mean to you?
Teamwork is absolutely where the work gets done. As I said, we have a team of 8 other people here. No one person can get the work done by themselves. Coming out of the pandemic shutdown a few years ago, it was important that we get back to work in person. And the reason for that is because even though I may not need something from a coworker every day that in person, I can get that information on the phone or on an email or on a Zoom or a Teams call. The best work gets done when you overhear things. It's this water cooler conversations, or we're sitting in this classroom that's also our break room. I might walk through this room and hear people talking about a deal they're working on, and that might trigger an idea that I can just drop into the conversation and then move on. And that kind of accidental opportunity to share information, I think, is what builds teams. So I think it's important that we work together in a physical space together, that we listen to what other people are doing. Teamwork to me largely means listening and supporting one another.
So that was all of the 5 types of work. Thank you for that.
Sure thing.
And also, Tony, you talked about the LBW, the long, lonely, boring work. So can you tell us about the LBW inside of your career?
Yeah, a lot of my career was spent working on highly functioning teams. So it was rarely lonely or boring. I would say when I was a banker, I got bored because it was doing the same thing over and over again. There was no creativity to it. We had to fit inside that bank box. And I got restless. It wasn't lonely, but it was boring. As I moved on to other organizations, I think that the biggest challenge has been being part of a very small team. I led a team when I led a loan fund for the state of Maryland that was just 3 or 4 people. And we were surrounded by other people in a much larger agency. But the work we did was somewhat isolated. And in some ways that got lonely because we didn't always have the support we thought we needed from other parts of a large government agency. But that's about it. Working in the community development field, it's a very collaborative field. I can call up CEOs and other people in other loan funds throughout the state of Massachusetts and throughout New England and talk about the things we're facing. And those are always very productive phone calls because we're all facing the same things. Maybe not the exact same thing on the exact same day, but the challenges of fundraising and working with government agencies and working with the business community to find the people that need our help, these are common challenges throughout our industry, and there's always somebody we can call to talk to about that. I think I've experienced less loneliness and boredom than most, and I hope that what we're bringing to the entrepreneurs that we're serving is an outlet for them to get away from that loneliness and that boredom and to see the opportunities to build their businesses.
I just have a couple more questions for you. Ian, what is some advice that you would give to anybody that's like first starting up their own business?
And we only have a few minutes?
Yeah.
That's a day-long conversation, Mike. The first advice I'd give to somebody who's thinking about starting their own business is to write out a simple plan. It doesn't have to be long and it doesn't have to be fancy, but to put down on paper what it is you're trying to do. What's the problem you're trying to solve? What's the need you're trying to fill? And what's your value proposition? What is it about what you're offering to the community that will make people want to pay for it? Who's your market? Where are you going to do it? These are simple ideas that I think people sometimes overcomplicate when they write a business plan. But in writing the plan, the purpose of the plan isn't just to put it on paper, but to share that plan with other people and get their feedback. And I think one of the absolute best things you can do when you're starting a business and you've come up with the basic outline for your plan is to show it first to people that you think will be supportive of it. Show it to your parents. I show a plan to my mom. She's going to say, honey, that's the best thing I've ever seen. That's great. That helps me build confidence. More importantly, I need to show that plan. You need to show your plan to people who are skeptical. I think the absolute best thing you can do when you're starting a business is share your plan with people that are skeptical of it and find out why they're skeptical and try to overcome their skepticism. The people that say yes to you all the time, you don't learn anything from them. We learn more from falling down than we do from running a race without falling down. If you show your plan to people who say, I see some problems, they're going to see things you didn't anticipate, and that's going to help you meet those challenges before they become real.
That's awesome. So the last question, what's one fun fact about yourself nobody really knows?
Some people know this. People that are close to me know this, but most people in the business community don't know this. But it's probably happened already on this podcast, Mike. My voice puts people to sleep. When I was in college, I worked at the college radio station overnight, and this is back in the 80s, and it was rock and roll, and you'd play a few songs and then you'd announce the songs and maybe read a little bit of news and then play some more songs. And the nurses at the local hospital called me up one night at 4 a.m. and said, could you stop playing music and just speak? Because your voice puts the babies in the nursery to sleep. And we'd really liked that. And then my wife and I had kids, and I read them bedtime stories. And I forgot, Mike, that you read kids bedtime stories to help them sleep. And I'd get mad about that. They'd fall asleep when I read them a story. And I'd say, you can't fall asleep now. It's the climax of the chapter. And I'd wake them up. So my voice puts people to sleep. And I hope I haven't put you to sleep or any of your listeners.
You didn't. I do want to thank you again for coming on. So appreciate you.
Absolutely. Thank you. I appreciate the opportunity.
I truly appreciate you. So thank you for that. Appreciate that.
Absolutely.
Yeah. I want to thank every single one of you for all the support that you have shown me in my journey of becoming a realistic CEO. So ways that you can support even more is by going onto my website, www.realisticceo.com, and ordering your copy of the Realistic CEO Children's Book, as well as the Realistic CEO Podcast Magazine and our latest book, Unrealistic, which is the blueprint of what it is to becoming a CEO from my lens and also the lens of my dad, who is already a CEO. And ways that you can support even more is we also have a gift section where you can gift books to kids in lower to moderate income communities, and as well as a partnership section if you want to become a partner with us. And thank you for all the support you're showing. See you in the next episode. Peace.